Rosey Koberlein. I'm the CEO of Long Companies, which is Long Realty, Long Mortgage, Long Title, Long Insurance, and of course our Long Realty Cares Foundation.
Tell me a little bit, within your specialty, what's going on in the housing market right now?
Well, I got to tell you, it's pretty exciting what's going on in the housing market right now. If you take a look at March, we are up 55% increase in pendant units that went into escrow in the month of March in 2010 over March of 2009. Now that's been happening every month since January. We've had this real dramatic increase of number of pendant units. So buyers are out there buying properties, sellers are out there properly pricing their properties because they know that the buyers are in the marketplace right now.
So obviously consumer confidence is getting a little bit better in the buying market. And what do you think is driving that? The fact that people understand a little bit better what's going on in the economy now, or something different?
Well, actually, I think there's several factors that's driving buyers to the marketplace right now. First and foremost, suppressed prices. Our median home price in the Tucson marketplace is around $158,000. That's down from a high of almost $240,000 in our heyday of the marketplace. So prices are suppressed. Interest rates, today's interest rates are a little over 5%. If you put a little bit of money down for origination fee, you could even get below 5%. So interest rates are still low and rumored to go up. I mean, the National Association of Realtors economic, Dr. Yohem, he's predicting 6% or more interest rates by the end of the year. And the inventory of homes available to buy is actually shrinking. So we're getting back into the game of some supply and demand moving in an entirely different direction than what it was before.
What are you seeing in the foreclosure market? Most of the purchases in foreclosures, new construction, what's been your experience?
Our experience is somewhere around 35% of our current transactions are REO properties. That's not accounting for short sales and that kind of stuff. And that is an issue that is really being discussed right now in terms of what's the go forward on this level of inventory. Depending on what you read, there's what they've now labeled shadow inventory, right? The shadow inventory runs anywhere from, just under 800,000 homes across the country to 7 million. So, that's a big range there of who's going to be right in terms of those properties coming on the market. What we have experienced, though, since November is that the banks have really started to manage the amount of inventory that they're putting out on the marketplace. Much better situation for the banks because it's at a level and a rhythm that they can control and really respond to and react to. We're seeing the banks now actually pushing people more towards short sales than foreclosures. And then also, that has an impact on maintaining prices in our marketplace.
One of the things I'm hearing is the banks do not want to take back the properties.
Right.
So they're more willing to work with the borrowers. Is that your experience?
Yeah, and that just started mid fourth quarter of last year, and we are enormously grateful that they're doing that.
So that's a good thing.
It's a really good thing. That is a great thing.
What do you think is going to happen after the tax credits end April 30th? Going forward, how's the market going to unfold?
Well, I mean, anyone's crystal ball is as good as the next person, but my thoughts on what's going to happen is that I think that initially there's going to be a little bit of a retreat, right? Just so that people can see, okay, what's going to happen? What are the banks going to do? Are they going to put a flood of properties on the market or not? Are prices going to fall a little bit more? And I think that's going to last something shy of 30 days. I really do. And then I think the market's going to get back to the rhythm that we've been experiencing so far this year, because we still have very, very, very low prices that we'll never see again in this marketplace, because we're still a highly desirable destination place to live, right? And prices this low, they're only going to go up eventually. Low interest rates are rumored to go up, and again, we have a shortage. We're going to have a shortage of inventory here, and I know that that's a whole new notion for people to take a look at. But when you have the banks willing to restructure in these mortgages now and control the amount of property that comes on the marketplace. And the new home construction market has retreated in terms of putting on new inventory at the level that they were before. We will get into a shortage situation.
So that's encouraging over the long term.
Absolutely.
Excuse me.
No problem.
It's the beauty of video. Talk to me a little bit about if conditions could be changed, what would be the one or two things going forward that would most help the housing market?
Well, what I would like to focus on is the lending side of the equation. Okay, you know, quite frankly, the pendulum was way far out here where, you know, if you signed your name on a document, there were lenders out there that were willing to loan you money, right? And now the pendulum has swung all the way over to the other continuum where it is a real challenge to get a loan in this marketplace right now. And the one area that I would like to see the lending institutions to really wrestle with and change is our jumbo market. Jumbo loans, if they were to come out with a product that was dependent upon the amount of equity that a consumer was placing on a down payment on a jumbo loan rate and then took their net worth into consideration, that makes a lot of sense to me. We've actually had loans for people where they're buying $1.5 million, you know, they're putting $500,000 down, their net worth was over $5 million and they had difficulty getting a loan. And to me, that just doesn't make an awful lot of sense. And I think that if that issue could get handled on a regulatory methodology, that would then create more confidence in buyers in the marketplace that would trickle down into lower price points.
Terrific, terrific. Talk to me a little bit about what you foresee for the end of 2010, how the market plays out through the end of this year, and then looking forward into 2011.
Okay. I think after we see what happens here with the tax credit and the ending of that, which, quite frankly, I think we're going to resume the rhythm that we're on right now through the rest of the year. Now, there's always seasonality. I mean, one of our peak months is always August, and then we go into the fourth quarter and we always wind down from that situation. But I think on a national level, they're predicting 5 million home sales. I think Tucson will end up exactly where it was at probably last year, maybe a little bit better. 2011, you know, I think there's so many factors that play into that crystal ball in terms of what's the lending environment all about, what's the lending environment to new home building companies and new construction, because at that point we're going to need that inventory to come back on the market. And it's the builders, whenever they're going to see that confidence, and then it's going to take time for them to get their land out of their archives and then get through the city and that kind of stuff in terms of permits and that. But we have other issues in the city that are actually is going to affect, you know, remaining 2010 and 2011. I mean, we really, the temporary tax increase is an issue that the community really needs to wrestle with, and we really need to wrestle with are some state issues in terms of budgetary, in terms of education, and look at the face of Arizona and what's behind our face and what's going to continue to make people to come and live here.
There's a lot of discussion that the key to the housing recovery is jobs and employment.
Totally.
People need to get fully reemployed,
right,
and then also with new jobs coming back into the market. Talk a little bit about that relationship and its impact on housing.
Right. Well, you know, in the heyday of our real estate market, 2005 and 2006, you know, Pima County was at like 4.8% unemployment rate. Now we're at 9.6. I mean, so that in and of itself says a lot. And also the amount of immigration of people coming into the county has greatly decreased. So, and we're not seeing jobs being created. You know, it was just announced today, Raytheon was laying 225 people off, I think it was, and that kind of stuff. It's a real serious situation here, and it's one that I think leaders in the community, you know, across all industries really need to band together now and come to the table and say, what do we do as a community to start generating economic development, growth? What do we do? What do we have to do to really wrestle with our schools? It's time for us to band together on those issues.
Right, very good.